This was my downside objective last night. Not on a 15, it was on a 4-hour chart. Am I looking at the right one? Yes. No. This is what I'm looking for. Way up here. I mean, concern there, though, I saw this giant fair value gap way below us, right? No, I'm looking right here. There's a 4-hour right there. So I was looking for this to get hit and see if I could see a reversal pattern set up once we get down into here. So we're so far, we've had wicks come all the way through it, but we're staying above the consequent encroachment, which I like, which tells me we might be getting another run back higher. Everybody wants these equal highs. They're just leaving these intact, right? Everybody wants those. Maybe somebody wants these, but this has to break for me for that. So you'd have to close below our 6, this downside SIBI. I have to be below that before I start to, or at least close below that, come back, access it. Then I'd be like, okay, now we're going to target the main threshold of this last down close candle, and then the rejection block, and then the lows. But the fact that we're above this consequent encroachment here, I still think we want to go higher. So that was my objective overnight, and I want to see if we can climb out of here. So I would have been taking this, if I was awake this morning, I'd have been taking that as a long, based on looking for the specific. Many times you hear me talking about this, right? You look for that higher time frame objective, and then you look for the lower time frames to confirm that there's a change in direction there. So I would have been looking here, doesn't work, rolls over, or right here. Let's say it was right there. And you would think, oh, look, we're above this. If we come back and tag that, I'm looking for higher prices, right? Comes back through the mean threshold. I go, oh, I'm on the wrong side of it. We're going to look for here. Now, if we break through that, then I'm waiting for, we're gonna go lower, right? So it breaks through it, and you go, oh, good, now we're going to go lower. Then it breaks above it. You go, now you're in that consolidation type phase, right? So you would have been like, move to the sidelines and wait for market structure to shift. It shifts to the downside, literally closes below that last candle there, comes back in. Then we continue to go lower. Back inside this range, 50%, rolls over, takes the low again. Now we're looking for higher time frame. We're saying, okay, so we're not going to stop here. We're going to go lower. Wait for it to reverse here. It does. Now we're looking for it to go higher. You catch your long, no body closes below it. Got a change in direction. You're back inside this larger range. Then you're looking for, I don't see anything significant here. You'd have to wait for this to get broken to the upside. It does, takes out the upside. You got to wait. Now you want to see this thing turn into a fair value gap above that high. It doesn't. It literally retraces all the way back down into this little imbalance here. Not clean price action for sure. But again, it doesn't break the market structure to the downside, so we're still going higher. Lots of chopping here. Now we're getting a nice clean move. So anyway, I want to see more upside. What do I want to see more upside to? I need to see us get above 683. So right now you're looking around 673. Next target is 639. 673 is next. Change in direction. So good morning. Hello, Melody, you're the first one through the door this morning. Good to see your enthusiasm. Long out or reversal around 7 a.m. Good morning. Good morning, Russell. First time on time. And first through the door. Wow. Yeah, it's not going to work on that level, is it? Yeah, you beat a D. He's usually first through the door. So anyway, you got my idea. I'm looking for upside. And if we're going to bust through and this is going to be a takeoff, we're looking for these old highs. We're looking for the highs again. Not quite there yet because we have to get through the bull trap. If we don't get through this bull trap, then we could quite easily roll over and come back down and seek this downside liquidity. So if you look at how much chop we've been in here, like, look at that. Welcome to the Christmas season, hey? That's just a lot of back and forth, beating you up if you're not careful. This is why when you practice on a 1 minute chart, these consolidation points, you start to get a better idea when you're in these larger time frame consolidations, some key areas to look for. So in the end, they help you out. That 1 hour candle at 4 p.m. acts like a gap now because of the 5 p.m. price close, 6 p.m. open. This right here. There's lots of liquidity sitting up there. So even if you come up to here and roll over, you just take that and then you roll over again. I want to see it punch through here, come back and use this and these highs as support to start targeting higher. Yeah, I see that close and open right here. This nice little gap there. So 1800 or something, wasn't it? Yeah. That's huge. Yeah, we're going to come back for that, eh? Look at that. Let's send that one from there to there. Let's send that one. It's a ways up there yet. Well, Russell has spoken. Russell has spoken. He demands that price action get there. That's what I want to hear, buddy. Demand price action. Price gives you what you want from the market. You can tell I woke up like literally 20 minutes ago. I have that early morning voice. This is the best time to do a podcast in the morning. I have my morning voice on in the morning. All right, so I'm looking for this right here. Let's see what kind of reaction we get off of the bottom of this consolidation. So if it ends up, so what am I looking for here? Of all the models that we know of, what would we expect out of this consolidation? And it to just come up and hit the bottom of the consolidation and then start rolling over. So we start looking here to say, do I see a reversal setting up here on here for a specific trade model? What's that trade model called? Might as well give you guys some questions in the morning if you remember. Gold making an all-time high. Well, we'll have to have a look at that. Hans, good morning. Good morning. Hans Gruber. No, I don't think he's a villain. I don't think he's out to steal anything. He's just here. Him and Theo are just here for some money from the markets. Yeah, what level? What are we looking for? Anybody want to answer that question? If you're not interested, then I'll just shut up. We'll wait for we'll look for a new setup. I like this for continuation. That's nice right there. You missed the show yesterday. Yes, I did. Yesterday was a really good show. Yesterday's video this week, since I came back, I've been dropping some awesome accuracy. It's been really good. I'll tell you a little bit of calm your mind down. Sure makes a big difference. Sure makes a huge difference. So I feel a lot more chilled, a lot more relaxed. Though I've had some weird triggers since I've been back. I have to talk to my shrink about that. Some weird triggers. It's just, my wife's like, why are you letting that bother you? I'm like, I don't know. And then I precipitate on it. So I got to get myself, I have to work on trying to break myself down, my thought process down sometimes. Anyway, you guys don't want to hear about my PTSD and all my shit. So let's talk about the oil, the Texas tea. 1 hour, change in direction. Look at this beautiful sucker right here. Look at that. You can't ask for more perfect entry there. Your stop loss is literally sitting right there. You take it, and it breaks the downside. Right there you go. Ooh, looking for range extension now. Did it take the low? It did, right there. So now you look for a continuation model. You look for a trade back into this candle. It's mean threshold, and you can allow it to come back into this one more time. But typically, you want to see just hit that mean threshold, roll over and go. And boom, down she goes. Off that mean threshold. Then we see a change in direction, looking for this range here. See how this isn't mostly in the premium level? Runs up above it, comes back down, tags the high one. You wait for market structure shift here because you're up in the premium portion of this range. It breaks that high. You go, great. Now I'd like to see that literally come back. It does. It literally gaps back here, tags that, and then leaves. 50%. Remember that area that didn't get validated? We're back here again. Inside this guy here, you want to break through that now to continue going higher, right? It's the first test. See how we never got a chance to test it back here? There's the test. Rolls over. Trades through 50% of this thing. You go, oh, we're going to go lower. So watch here. Does it trade through that on a close? Now you're looking for range extension again. See how it trades through it here. Trade back up. All of this is valid now for a rollover and go lower. So we're looking for around these lows. It's not till you break that high there. You'd be looking for a continuation. And then you'd be hunting up here for oil. But looking for downside in oil right now. This is embarrassing. Look at that. $17 and we're back down to 12. How shit is that? So it's not a cold winter this year, I guess. Wow, that's a crazy drop. That's the same one. Gold. Let's look at gold. Wow, that's weekly chart, right? Weekly's just about to break out its new highs. Let's do we'll start at 4 hours. This must tell you silver must be looking for a nice little punch higher too. So Vitali is probably catching a nice little silver run again today. Break right here. Then we come back, revisit it here perfectly. Sideways. Find support. Take the high. Close above the high. Come back, tag the high. And you go higher. So that's 4 hours. Still looking good on a 4-hour chart. There's a C-level grade entry right there. Trade above the highs, make a consolidation or a BISI, little fair value gap, and then your graded response all the way down to a C-level grade. You leave a portion open, and then we go higher. How many hours you have to wait on that one, though? So let's pick an upside objective where we think this is going to go. Okay, there's 2.5, 3, and 4 banger way up there. All right. We'll see where we go from here. But that's my upside objectives right there for gold. It's a nice. Oh, remember sugar yesterday? We wanted sugar to go higher. Wanted to see it come back and hit this breaker. Look at that. It came back, rolled back over, and again, hit it some more. And look at that overnight leave. How delicious is that? So if you're into sugar long, you're welcome. I gave you that one yesterday. Coffee. It traded right through the mean threshold of that candle. Creates this reversal. Oh, trades above it. Then this is crappy. That's not acting the way you want, so that's bouncing because we were looking at that for that to go higher. It gets through that mean threshold there. Trades back into it right here and then goes lower. Takes out this low. Wow. Well, coffee didn't go the way we wanted it to go. Wheat hit our upside objective. Change in direction right here. Trade below it. Did not get a chance to get back in on this. Or this. Wheat is in. Wait for a reversal now that this low is taken, or a continuation. If you don't see the reversal, look for that to keep coming lower. Well, what about our bonds? We talked about bonds. There's the trade above. That's the entry right there. When we started talking about bonds the other day, we set this out here. Traded into it. We're looking for a long. It takes out the high. Now you want to see this mean threshold hold price. It does. It's wicked back into the weekly, new week opening gap here, or the week, not week opening gap. That's a weekly fair value gap of some sort, way back there. Enters into it here, tabs it. Now I want to see it climb up above here. Use this candle as support to keep going higher. So bonds should go higher. So what does that do to your interest rates? How does that affect your market? Look at how close we were to a 2.5 standard deviations. Oh, so close. Takes out the low, creates a fair value gap below the consolidation. Institutional order flow entry drill right there. That's just a lot of chop to play in. Nice 2 standard deviations, man. It's pretty nice. You can expect that on gold, I think. $133.60. That's what I'm looking for downside in British pound. See if we close through that and use that as leverage to go lower. Scotiabank. I don't know why I was on a 15-second chart there. I think it's because I was trying my bought out on that thing. 1 minute. Looking for that to go lower. Look at that on a 15-minute chart. Gary, if you were here, you could see this. Lows taken. This is banks on a 15-minute chart. Takes the lows, change in direction, trades above it, trades back into them, consequent encroachment, or the mean threshold of that. Goes higher, hits my box-to-box trade. Internal range liquidity hunt, hits it, stops. Now we're going to roll over and to come back into this, 50% of this, and then you start scaling out your profits. That's interesting. That's a bank. It's on a 15-minute chart. What the hell? Look at that Laurentian Bank. Just lock it. That just jumped 10%. Obviously, they secured the deal of that bank buyout. Look at that. It's a $6 jump. That's 20%. $6 jump overnight. Holy doodle. I didn't have my chart sitting up. I'm like, oh, that's not doing anything. Meanwhile, they'd already launched 20% higher. That's awesome. These guys haven't launched anywhere, have they? So that's awesome. That's a $6, 20% jump. Wow. Oh, I don't know why this is way down here. This is supposed to be. Anyway, the DAX. Let's have a look at Mr. DAX here. The German DAX. So remember yesterday we were looking for this retracement back into here. It was just an A+, just kept going. We didn't get any of our looking for the perfect entry here. Remember, we were trying to reverse engineer this thing. It just said, no, we're just leaving. I'm not even going to give you an opportunity to play your little reindeer games. We're out of here. So it left, made an all-time high, and so far it hit that next objective, that 3. So that was 2.53. Now you got to take a 4 banger out of that. And aim for, I think that was a 4 banger right there. It's so off on my charts. This is 2.5. This is 3. And then 4 will be way up there. We'll take the 2.5 and put it up here. That's the next upside. Oh, maybe we used a different one. Maybe we use this guy here. Yeah, there's one. There's two. That's the one we're using there. So I think this one, if you're taking this little 4-banger from here, will put you right here. That's my upside objective, provided we don't take the main threshold of this candle out. Oh yeah, let's go back to looking at Disney and stuff. So coming back into this gap. Remove all my stuff here. It's yet. Silver. Highs are taken. It's a bit choppy right now. That's just a 5-minute chart. No swing was taken here, and yet we're still finding some support. Change direction into support. Get through it. Tough call. Make sure you stay above right there. On a 5-minute chart, let's look at a 15-minute chart. There's that 4-banger level. Right on the money there. You don't want to see that get broken to the downside. So if we're still going higher, this has to hold. The 5-minute has to hold there, otherwise we're coming deeper into the range. And this is too much chop for my liking. Look at this Novo change direction. So we're looking for it to run down into that wick. I think this was a wick on a higher time frame. Gave us a change in direction right here. So you got to keep your eye on these changes in direction. So just because I'm calling it down here, if you see it turn, you've got to be on the ball. As many times we look for an objective and it doesn't reach it, it just shows you a reversal. And there's your change in direction right here. It clears out the high right there on the close, comes back in, uses this as support. Now we're looking for a premium box. Runs through the premium box, takes the high. So now we're looking for this to hold. It comes back, revalidates the one that we missed right here, and then goes higher. Takes the highs out. At least a lot of people are in Denmark, I think he was mentioning, jumping in on this. So that was a nice little $24 run. That's just an hourly chart. We don't need any of that stuff. What's this? So we came right back up into this new day opening gap, or new week opening gap, is that? A new week opening gap hit it perfectly. And now we're getting a nice reaction off of that. So change in direction. Wick did some damage. You fill in your SIBI, trade below here, wait for a market structure shift. You trade below it right there, trade back into it here, come lower. Looking for this to get broken, looking for market structure shift now. Kevin might actually get his lunge down now. So we're just retesting this swing point for continuation on the downside. Wait for this consolidation to break below it, and then look for a retest of that. We could see a big dive down now. Right in 3 minutes. And the dive begins. Thank you, Jean-Paul. Good morning, good morning. Derek, D Master B, B Master D, the B Master. Welcome, Derek. How you doing, buddy? Hadi, where have you been, young man? You're late for school. Melody actually beat you through the door today. She came through the door going, "What? Where's everybody?" She's like, "Do I get the front row? Do I get to sit right here where Hadi was sitting? Holy smokes." And then she started peacocking around the room like, "I'm first." It was embarrassing. You should have seen it, Hadi. She actually stuck her head outside in the hall and went, "Do I have the right room? Am I in the right place?" It was a surprise. There's the retest of the consolidation. Now, bring it home. Let's go drive it down. One more minute. Watch this thing just go. A Submariner. Are you chasing this? That's a nice entry. So as soon as it takes that low, pay yourself. If you did catch that one I was calling here just a few minutes ago, if you did catch that and you're right here, pay yourself, move to break even plus the cost of the trade, and you can see if this is going to be the diver we're looking for. Oh, look at this. It's set opening bell. Pay yourself. Move your stop loss to over here. Pay yourself at the lows. It's a zero, should be a zero stress trade if you took it just prior to market. A bit ballsy, but you know, when it starts to make the turn here and then starts to break market structure to the downside, you're like, well, I'm pretty confident if it can come back here and hold that, we can catch that for a short. And right now you're in a 83 to, you're in a 50 handle move already. And if you're paying yourself, if you're greedy and you just want to run for those lows and that comes back against you, your lesson to learn. And if it actually makes it there, then you've just reinforced that need to hit the long ball. Oh, the mighty tweezer pattern. Changing direction. Oh, are you getting squeezed? Do you wish you paid yourself? Then you'd be out by now. In my thing, you'd be out. You would have been here. We would have been out right there. So our trade would have been off there, but we would have paid ourselves along the way. There's the rejection, or there's the discount box. For the box-to-box trade, that is. Here to here. Would have been... No, that's the only one that's really in there other than this guy here. You get a chance to get your trade back on again here. Let's see if it keeps coming lower. And there's nothing down here, you guys. There's nothing down here. Except this box right here. And that's at 443. So it's another 100 and so handles all the way down to 343. So you got 100 to 200 handle drop here potential. And welcome to Choppysville in the opening. The inverse tweezer pattern. There you go. Traded back through this. Now you don't want to see it get back through here. You want to see that roll over and keep coming lower now. Good for you. That's discipline, Melody. That's discipline. Developing that discipline. When you can expect there to be some chop back and forth and this Judas swing, thinking that we're going to go lower, the Judas swing, and then all of a sudden, after you've taken all these longs out, the people that want to go for them freaking highs, they just set the trap up there, right? Sorry. They set the trap up here. And they say, how many of these equal highs? Look at them, 4 of them up there. There's no way they're going to leave that untouched. But you see how they bring it up there? And they just slam it down against you. Say, nope, I'm not going to give you the high. Let's build up some liquidity up here. All these people that want to keep pushing for these 2 highs, push. Build up a whole, engineer a whole bunch of liquidity inside here. Slam it down, take them out, then run it up and take these highs. Just barely takes the highs out. So you engineer a whole bunch of buyers and sellers, people who want to go short that think that that is support, and you got a bunch of people here that still think I want to see that go higher. So you engineer them all in here, then you slam down, pair these guys up with the guys waiting above the high here, done. Now you line up a whole bunch, the big boys are sitting up here. You come back and you clear out this lot, and then you say, okay, we're doing a little bear flag for our retail people. Now we've taken out those highs, we're going lower. Create a little bear flag, then slam it up against them, come back, take them out, and then run it back up to the high again. Consolidate. Here, we're drawing them in that we're going to go lower, leaving all that engineered stuff up there. And then when they've gathered up enough would-be victims, I can see them running that out. But there's still some downside. Look at all this downside down here now. Upside, downside. Somewhere along the line, someone's looking for big institutional buyers and sellers to start exchanging hands. Big money that can afford to weather these lows. We'll see if they're going to take this back up. There's that change in direction. Trade below it. You're slightly above it, below it. Now you're above it. Now you're back inside it, finding support. Going higher again. There's the chop. Wait for structure break. Target. Wait for the bull trap to go. This would be nice to see this come back, tag this, and then run for that, but it's already hit that. So if we get a roll over here, look for this candle. You don't want to see any more than that mean threshold of this candle give way. Give me a nice little breakaway here. Take that out as well. That'll be an A+ takeoff from here above that high. Run it out. So there's the Judas swing, right? Into the opening. Or is this the Judas swing from the opening, taking people up, thinking they're running for these highs again, and then slamming it down and taking them out? Welcome to Christmas, my friends. I can see why Michael doesn't like trading this. You get really choppy. But let's just practice staying on the horse here. On the horses in a full gallop for a rejection block. Hit it. Look at that snap off the rejection block, hey? Do I need to say it again? Do you need to hear me say it again? Pay yourself at rejection blocks. Now you want to see this hold and then range extend. And there you go. Let's clear out that high. Gotta hold. And we're still closing above it. So even with these little wicks creating a little bit of a trouble, you're still expecting that high to get taken. There you go. High's taken. Good. Now that's range extension model right there. Now we're looking for a continuation model here. So we're back into continuation from here and an extension from here. Right back up, fill that. You see that? That was the target. That's box to box right there. pay myself again and break even and still in. Ooh, Melody. Look at all these people we have to visit for drink night. Sarsaparilla at Melody's place. She's going to take her paper money and make some, get us some paper beers, paper drinks for everybody. So all we get is a range extension model. We don't get a continuation just yet. We've come all the way back up into here. So there's your continuation to the next highest objective. We've hit it perfectly. And now look at that reaction we're getting off of that premium array. There will come a time. That's right. Look at this. Right off that premium array. And now it's saying, I'm diving. Let's see if we can get this. Oh, it's hit right off that 530, eh? That 530 is an important level. Why is it an important level? Melody, why is that 530 an important level? Tell me why. I don't like Mondays. Tell me why. The 530 is a good price for. It's for me. Why is 530 why is that 530 a stop right there? Anyone? 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 Bueller? Bueller? Anyone? Anyone? Out at break even. But you see how you paid yourself along the way? Internal range liquidity hunt. It's a great way to make a little bit of bucks. It was a previous day's low, 530 level. Was it? It's also the mean threshold of this last down close candle here. Right there. See that? That's the downside. You want to see if that holds price or if we break through price. So right now it's holding price. You see a change in direction. We run back up in here. Now you want to see a continuation, right? Otherwise we're still stuck inside this leg. And that mean threshold on that hourly chart is holding price right there. And you want to see if that's going to motivate us to get on the next hour to get above this SIBI and then this bull trap to start running higher into that gap that we'd marked earlier, the new day opening gap. So far this SIBI down here is getting worked. If we bust through that, then we're back in sync with I think Kevin wants us to take these lows. So you're back in sync for, I'd be looking for $4.99. Watch if it closes below there. And it do. Now it comes back, tags it right there. Now send it lower. Send it. It can come all the way back up into here. Now you want to see clean price action, right? So that would be like anywhere inside this box here now. I want to see that send it low. Oops. So we're looking for range extension from here. That means I want to see these tweezers get taken out. We're back on side with Kevin going lower. Looking for 25,460. Looking for this half this wick and the full tweezer low. See, usually if you take that longest wick there and you see the 25%, it kind of taps it and then takes off, then that's just a sign of weakness getting down there. But see, we're already into the mean threshold already. So just finding some legs here, getting ready for this big run through here. And Jean-Paul, you're looking for 25,460. What's your target? Let's look on a 15-minute here. 25,460, you say, huh? These equal lows down here. There is another little box down here somewhere. I don't have the time frame written on there. Ah, right here. Get back in, validation, or validate here, retest here and here. Looking for a continuation on the downside. This is the range extension model. Usually when you see this, you want to see it come down, tap that, range extend, and then use this candle, because it's far enough away from this now that it's been tested. As soon as we get that low taken, you're looking for a retest of the low and half that wick. And then this becomes our future bull trap. You see, that's already starting to set itself up. So when you're looking into the future, Melody, you're kind of saying, all right, this is going to be our potential bull trap if we can get back through that, right? So there's the range extension. Now we're looking for a continuation model. So in other words, I just want to see this close below here, come back and use this wick as support to go lower. That's a perfect short there. Look at that. I love that. Love that full-on premium smack and then fully lift away. Come all the way back from box to box. So we went from box here to box. That's a box-to-box trade. Reversal, box, back to box, broke through it, gave you your extension model, trade back into it, go short there, extend, like beautiful. That's some super sweet price action there. Now you want to see this, just tag here, right there. Yeah, that's the low right there. Just missed it. So now we've got the continuation. So we still come back, give it a little kiss. Again, we don't want to see any more than that mean threshold give way. And then range extension, or range continuation. So that's the model 1, 2, that's the final one, the fourth one. We're hitting our 15-minute discount array. There's the retest right there. Must have just wicked into there. Hit our low. Right there. Another extension. Right near that consequent encroachment of the downside SIBI. If we get a reaction off of that, we can get another pump back up into here. So there's our extension model, and then the continuation model. Didn't continue very far, right to a downside objective we're looking for, that 15-minute, right at the consequent encroachment. And now if we get a little pull off of here, where do we want to come back to? It's already hit there on the 15-minute as well. See how what we're looking for on the 1-minute chart, you see on the 15-minute chart here. See that SIBI? It's broken to the downside. We ripped all the way back through it, but we didn't close above it. Then we came back into it again, finally did a range extension. Oh, actually, this is the extension. This is the continuation. So that should close below there. So do we turn here? Is this the short-term resistance? Remember that bull flag or that bull trap we talked about having to get through? We're talking about it setting itself up in the future. Here's your change in direction, change in direction. Now if we get back up on top of this bull trap, looking for another run back deeper into this range, pull your fib tool from high to low. The fib tool. See how 50%? You'd have to get right down into here to catch that for a long. Excited at 25,510. To get to the target, but not moving how I wanted, which is quick and hard. So took my profits and done for the day. Good for you, Jean-Paul. I'm just keeping in mind that we are in the higher time frame consolidation, and within this range can do all sorts of things. It's very true, man. That's a good way to safe way to play that. See how we're through the mean threshold of this candle. We've come back into the mean threshold of that candle. Still looking for this high to get taken. And there's 50% of the retracement back in that range. So now you're looking for a premium to get run up here and close above that, and then look for this thing to come back below 50% into this candle we already started seeing after the moment it started forming. We were talking about that being the bull trap later, and here's later. We want to see it clear through there and start running back up higher. And we've got, and this is our macro time, right? This is when you expect to see some sort of shift in movement in this macro, 950 macro. That retouching that old high there, or old close. Got to wait for the wick though. The bull trap extends all the way to the edge there to kind of give you this idea like, come on, take me long, and then slam back against you. It's done that so many times to me. So you wait and then wait for a discount. Otherwise, just wait for a different setup. You don't need to trade 100 times a day. Just wait. That's not a break above. That's just a poke. You want to see a body get above there. And you're already up into the premium. So this is already retraced back to a level right here. that we'd like to see price hold and go lower. Remember, that's our area that we want to find support at to keep pushing lower. It did. It gave us our entry, our two trade models right here. So now you want to see it get broken, and now we're doing an internal range liquidity or reversal model. We got a reverse, then you look for an extension model. So we're hunting internal range liquidity, but you're already up at a premium, so you can see how they start to overlap now, Melody, where you go, oh, okay, well, that's it at 50%. I like seeing that one way down in here so that when we trade above it, come back into it, and it has a confluence over here, like a SIBI, and then that was down here somewhere, and we break through it, come back, you go, okay, now I'm really happy about running on a lot of these down close candles to go higher. See that bull trap? That's giving you, come on, tempting you, come on, take me for a long. So watch here, still not above it yet. Wicks. That proceeds to drive down through this and this. Then we look for our continuation, our extension continuation models from here. It's a rinse and repeat, Melody. Rinse and repeat. Same four models over and over and over again. Because the algorithm does the same thing. Like Michael says, every day, it's the same thing every day. Every day you get the same setup. It does the same things over and over again. It's an algorithm. It's going to run the same pattern over and over again. And we've seen this every day now. For as long as you've been here with my show, every day, same thing. So what do? We came back, we retested this SIBI that hadn't been tested yet. We ran all the way through to it. That's a good sign because we didn't get a body break through here yet. But again, we didn't get a body break above it. So to me, it's not really valid yet. And our go, no go, I call this the go, no go zone. It's the go, no go zone. So either this is going to hold it for no go, or it's going to support it for a go. In my old logic, I would have taken the bull trap. Yeah, but now you see, we've had this, we just started doing this bull trap thing a while ago. I think it was last year. We started seeing the logic of the bull trap, and then was like, okay. And now the rule is body must break the rule, must break the high, must close above. And now when we've got this no-go zone, this go, no-go zone, that's all the tempting buyers to keep going higher. Don't fall for the trap. Just wait. And if it takes off, that is not a validation of, yeah, see, I know we should have taken it. It's just not for me, it's not violated. It's violating my rules. So I am not going to bite. Because if that rolls over now, you're all going to say, oh, I'm glad it didn't take it long. So think about what you say to yourself and what you're reinforcing with gambling mentality. Wait for absolutes. Like you saw Jean-Paul said, it's not acting the way I want it to act. It's inside a zone that's going kind of crazy right now. This whole higher time frame consolidation. So demand price give you what you want, not say, oh, well, you get flexible with your rules. Who was it who told us that? Who was it who told us that? We had it was a Buddha. I called him the Buddha. I can't even remember the name now. That's what happens when you get older, you guys. Russell the Buddha. Yes. Like, don't get... Okay, you're here, Russell. You give me the quote. I'm going to butcher your quote. It's like, be firm with your logic and your rules and flexible with the market, but don't get flexible with your rules and firm with the market, because you'll get beat up. Be firm with your rules, flexible with the market. Give it some, that's what the wiggle room's for. You see that? See that bull trap? Ba-boom. Bull trap. See how many times it was trying to entice you to take it? Aren't you happy now? Listen to Uncle Darren. Listen to Uncle Darren's rules. Go, no go zone, man. Doo, 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 doo. Now you're going to go back through this video today and create your rules around the go, no go zone. And why is the go, no go zone important? Especially when it starts to dovetail other areas you want to see hold price. Who's this? Oh, I thought it was going to be another one of them scammers. Another chat with a scammer. Okay, so now we're back through this level. Now we're looking for, remember, we're looking for our range extension model. Now we switch to our range extension models. And you want clean price action. So if this trades through here now and then starts to go higher, not acting the way we want it to act, right? Then you're back to wait for the bull trap to get broken. Right now, looking for a range extension. We've got a swing happening here. So this is the range we're looking for. Originally it was here, but now we're creating a swing. So you wait. This needs to come up in there. Institutional order flow entry drill, drive down, extend this small range a little further, and then we're aiming for this one next. So this whole pop into here, pay yourself at the most recent low, then aim for rejection block or old low. Remember what I say about rejection blocks. So we're looking for this to extend through this low here now. So think about it. If you want this to be aggressive, it should just leave here. Now it's done its thing. It's giving you your institutional order flow entry drill. Look at that right there. Now it's done. Pay yourself. Move to break even. You're done. You're safe now. You got a risk-free trade and you got coffee money. Rejection block. There's the next rejection block. So if this pulls back here now, you're going to go, crap, should have paid myself at rejection blocks. There's some logic to what he talks about. Now I want to see this extend all the way through here. And then I want to see our continuation model next. That's demanding price give you what you want. So far we've had the bull trap. We're not going to get suckered by the bull trap. We see the reverse. Now we're looking for range extension. We've got first little range extension, and now we're looking for this next one. So this has to hold. So we've got range extension model, internal range liquidity hunt. That was a trip in to go for a rejection block. Didn't get the highs. You may have got the highs. I don't think you did though. What's the high in that candle? There you go. There's the range extension. Now you want to see. So now we're back to model number 4. Do you see how that works, Melody? When it's acting cleanly, you get the models. Those 4 models is all you need right now. You're going to turn that paper money into Benjamins. Wherever you're at. Where are you at anyway? What part of the world are you at? Look at our continuation. Vitali's down in Ecuador. Where are you at, Melody? Are you down in the States? Are you somewhere else in the world? Where do you join us? Where do you hail from? Where are you joining us from? Switzerland? Oh my God. Melody, we're going to meet up one day. My wife and I have been talking about going to Switzerland for a long time. And definitely you need more than just paper money to live over there. You need real paper money over there. That's awesome. Yeah. Switzerland's on our list. We're going to meet up one day, Melody. We're going to meet up one day. We're going to turn your paper money into real paper money because you need it in Switzerland. It ain't cheap there. Holy smokes. You're going to need one of those Swiss banks that you guys are known for to stash your money. Who needs to stash money? Don't stash it. Do something good with it. Watch this. We hit our 15-minute and we're bouncing off of the bottom of it. So again, you're back into, I want to see this continuation model now. So give me a little test on the top right there. And then I want to see it roll over. So there's another institutional order flow entry drill. This could stay open now and roll over and keep coming lower. Look for that range to extend again. Boop, done and done. Institutional. Yeehaw. Carry on down. Are you guys catching these? I gave you some great little trades today. Some delicious and nutritious trades. So we're totally in sync with Kevin now. He was calling it a long time ago. We're like, no, I'm not sure. Okay, yeah, now I'm sure. Now I'm with you now. Meanwhile, he was like, yeah, you guys, I was weighing it up here. I thoroughly believed it was going lower. So we're like, yeah, we're with you now, Kevin. We're all jumping on Kevin's bus now. For me, it has to prove it out that it's going that way, and it certainly did. So we're with you, Kevin. So you're waiting for 10 o'clock YHD. Why were you waiting for 10 o'clock? So 10 o'clock's right here. So we're looking for the silver bullet entry right here. And it has confluences with our rules or my rules of this, whatever your rules are. I keep saying our rules like you guys have to take my rules. You don't. This is what you grab looking at the 15-minute. Oh, you want to see it run into that or break through that? I'm not sure. I'm not quite sure why you waited till 10 o'clock, but okay. It's working for you. Looking for that 25,390 level. So if we come back we close below here now, we'll come back in. No, it's not closing below there yet. It's just wicking there. And then we take our little, you start watching this right away, Melody. You look for this to kind of set itself up right away. we want to keep going lower. So if this is a take profit model 3. So we're looking to see that this holds. If this trades back through it, then we've got the take profit model 3 ends. And because the new reversal entry model goes long, and then we're looking for 50% of that range. I get my no-go zone out of there now. You can see why that trap held. How many people wanted that, hey? I'd have to take this because this is mostly all down candles. You take it from this swing point here, you're well into a premium. 70% optimum trade entry reversal. If you're taking it from this one, not quite 50% yet. And to me, I have to look at the range and I go, where is my busy? So I have to pull it from that one or that one. So I'd like to see a return to this breaker. Again, this has to be broken to the upside, and then that short would be off for me. And then you get back in sync with it again. If it does go lower, you just wait for it to break through here, use this as support. That's our new no-go zone, no-go zone. And then you want to see it continue going lower. So right now, it's, if we close above it, it's support to come back inside that range to 50% or more. And if it doesn't, then we break through it. It's the go zone now for continuation on the downside. How's these other guys doing? I think we had some markers over here somewhere, didn't we? Oil is in Yuckville. It's in a Yuckaflux. Gold, still looking for gold to reach that 43.92 level. 43.93. This is good. Come back, find support at this candle's open. Keep pushing higher. That's the 1 hour. Run, little piggy. Run, little piggy. That hit our 2 standard deviations. Immediate rebalance. Yeah, you want to see this hold right here. Now I want to see this hold right there. And I want to see that start running higher now. Let's see if that keeps going. Disney's closing in on our gap here. We're looking for this to close right there. Our DEX. Let's see what we get for an hourly. Market structure is broken to the downside. This is our no-go zone. That's the no-go zone right there. You get a bit of wick. That wick did some damage on the hourly, but body freezes right on the consequent encroachment of the no-go zone. And then running lower. I think we're going lower in that one. Oh, my legs are getting sore here. You've been above it, below it, wait for a structure shift. This is not clean. Silver's not clean right now. Oh, look at that. Looking for silver or for ES to get down into 68.49 all the way to 68.65. There's 68.65, just shy of 68.65. Yeah, we're looking for way more downside for silver or for ES. Looking for that level right there. I'm with you now, Russell, or Kevin. Now I can see what it is you're looking for. This is nice right here, right into here. Yeah. That was how many hours ago? Or 15 minutes ago, 20 minutes ago? You see the range extension now? We're into that range extension model right now. And don't forget, these models are not perfect, even though they look damn good. You're looking for any signs that that model fails. We know when it fails. You know when it fails. Right? So this is going to be the go, no go zone right now. So it's got to stay inside here, roll over and come lower and extend our range. If it doesn't extend our range, then we're looking for another run above here, possibly another run to this 50% here. But this is it's got to get above here and above that candle right there. Find support at it, then that's no go zone. So we're not going lower, we're going higher. Becomes support for a run higher. And then if it keeps chopping back and forth, wait for market structure. Like if it's only allowed to violate the rule once, maximum twice, and then you're done. You wait for market structure shift. Otherwise, we're consolidating around one area that doesn't have any bissies in it that you can really bounce off of. So wait while it works inside that level. That's chop. That's high resistance stuff, right? You're very welcome, Hadi. You're very welcome, my friend. You've done very well for yourself, and I love your patience. I love your dedication to the studying price action, and it's certainly paying off for you and your family. So congratulations, man. No, thank you. I appreciate your friendship, man. I really do. And I really appreciate your help when I was in Toronto there, turning up, helping out those other guys. That's solid stuff, man. I love seeing that. I love seeing people helping out other people. That 15-minute fair value gap, yeah. You were waiting for that, were you? Come on, just extend the range. Give me my extension rule. This is still, it's sloppy, but it's still going to give me your extension. There you go. There's your range extension. Now we're looking for the continuation model. See the rules? That's the go, no go zone. And it works. It's going. 382. Is that your next downside objective, Hadi? On the, oh yeah. 385. Is there another one back here? Looky. Looky. Right there. 365 to 354. 365 to 354. 365 to 354. 365 to 354. Look for this. So here's our range. Here's our continuation model. You see this already forming in here, Melody? You don't want to see this get broken to the upside, and its bull trap is sitting inside the go, no go zone, right? So we can see a revisit all the way up to here. You could see a retest of that. Don't want to, if it's nice and clean, you should usually just tap that low and really aggressively go lower. And when it's kind of waffling around in here, and here's a 30, 21. So I should see this come down here now. According to Tibbs, that should be a return back lower now. Institutional order flow. Are we on 23? Oh, sorry, 21 was the low, the change in direction. So there's 21 right there. 23, 27 next. Let's talk about Tibbs for a second. You guys get a chance to hear my Tibbs lectures. You know, on my videos, you'll see Time in a Bottle, where I've discovered something that's very fractal over when Michael talks about time and price. Holy doodle, he ain't kidding. So I'm just looking for this to extend now, and now we've got range continuation. There you go. Range continuation model. How many times have we done the range continuation extension model today, Melody? How many times has it worked out for us? How many times? Crazy. And look at the accuracy on that level. People are like, how come we didn't get our highs? Well, if you look at my box-to-box trading setup, you hit perfectly on the exit. And then you wait for a new setup. Right there. Boop. You're short. You stayed in short there. And you're going, I want to see the bull trap break if I'm on the wrong side of this and it's come back against me. It doesn't. If you keep the rules solid, you would have gone, oh, look, it's changed direction. Model 3 would have taken you out there. But if you're really savvy and you go, I know it, look at that, it's tempting me to take my trade off. Nope, it did break through. Okay, good. Now I can load on another one here for a short, because now I see the continuation model. Then you can load on another one for a continuation model. And now we've hit our objective, the next 15-minute downside objective right there. Bing, done. Oh, can you feel it, folks? Can you feel the love? You can feel the love. I didn't count. That's the next 15-minute. All right, let's go hunting for the next objective. Our range extension continuation model continues to be delicious. Oh, I'm going to make sure I get that in the right spot. Yeah, that's right. So now we watch this. We want this to turn into the go, no go zone. Because some of you may say to you, when do you know it's a go, no go zone? When we break through it, come back into it. That's our continuation model, right? This is our go, no go zone. As soon as we break through it, which is what we're expecting a reversal here for a continuation higher to 50%, it didn't give it to us. So it says, no, I'm freezing on that. I'll give you a couple of wicks to scare you for all those people that are not savvy to this and they just go, oh, it's changing direction and they're chasing it all the time and they're not really studying price action. At this kind of level of precision, you tend to go, I'm going to chase that. And then it breaks right through it here. The moment it breaks through that, this becomes the no-go zone. The go, no-go zone, because now we're on the downside of it. I want to see it come back, tap it, and I want to see range extend. So I'm looking for this to extend. It came back into it again, still looking for it to extend. Or if it breaks through on the other side, you go, no, we're not getting our range extension. It looks like we've got a reversal back to at least 50% of the range. It hit it, and then all of a sudden, poof, finally gives us our extension. Now you go, great, now give me my continuation model. And we're looking for 50% of the wick. Look at that. Remember 50% of that wick? Bingo, hit 50% of the wick, rolled over and went lower, hit our next objective. This now becomes the next go, no-go zone. Does that make sense? Oh yeah, so where are we at now? So we're looking for, oh my goodness, we're looking for these equal lows at 320, 323. 323, my friends, 323. Get your bingo cards out, and we're looking for B23. Under the B23. And I know B doesn't go up to 23, but B23 is what we're targeting for. And then where are we looking for? We're looking for B30. I don't know why it's B. We're looking for N30 on your bingo card. N30. My God, are you guys killing it out there? Are you guys making some serious ducats off of this 4 model rule? I hope you are. B32. Do I have a bingo? Do I have a bingo? Hold on to your cards, folks. We're checking for bingos. Do we have a bingo? That is our 41st number, the grand prize. Do we have a bingo? No? All right. Players, eyes down on your cards. Let us continue. Heading for B30. So those lows now have been taken. What are we looking for next? We're looking for right in here. Looking at 300 level. Ooh, B30. B30's been hit. Ladies and gentlemen, B30 has been hit. All right, next number on our cards for the next downside objective is I-28. I-28. See you later, Hans. Have a great weekend, buddy. Bingo, says Russell. Looking for I-28, 282. Or was this just it right there? So then you just sit there and wait for your change in direction. So now we're looking for these key levels. And if we keep coming down, I'm looking for this guy over here on a 15-minute chart next. This here and this here I'm looking for support or resistance. So that is my next I-28 right here. If we continue to run through I-28, we're looking for 27. 27.2. So I'm going to put this down here like this. 27.2. That's what we're looking for. $68. You're looking for ES. 68.37. Are you looking for ES? 68.37. Oops, I'm on the wrong one there. Yes. Yes, Adi. I agree with you, my friend. 68.36. 68.36 is your downside objective for ES. If this holds, though, then watch this. And what are we looking for here? Melody. What am I looking for? When does my reverse model start kicking in? Because once we've hit these targets that we're aiming for, the next one down, and then we're constantly looking for, give me the next change of direction. Oops, let's put that breaker back there. The reversal pattern, correct. And then where's our bull trap? Is it here or here or here? It's a trick question. Which one is it? Think carefully. Which one is it? Which one's the bull trap? Melody? What's Melody up to in the back of the classroom? There's the reversal. Third one, because you have evidence that there is a shift by inversing. Don't mistake the market structure shift. They're all bull traps. They're all bull traps. Remember the first candle to the left of the SIBI? As soon as we break that to the upside, we're looking for this to find support. So it needs to stop right there. Is there another one, smaller ones down here? Stretch it out. Always look for those extra little suckers sitting right in there. These little tiny fellas. You see them sitting in there? You got to pull it, stretch it all apart here. Okay? They are potential hit points. If it comes through and you go, I thought those were flat. Stretch it out and you'll see them sitting in there. Okay? So here's your 1, 2, 3 SIBIs. We got the bull trap sitting here holding on us, waiting on us. So this is the range we're trading in, so you take the fib from here to here, that's the swing high, and it has the bull flag in it, right? Or the bull candle. So we're way up in the premium already. So you want to be down here catching your discount, and then you want to see it run up. It's got to break through this bull trap, find support at it, and then we hunt for the next one. And the next one doesn't have a swing point, so I hunt for this guy here. I expect to see some sort of resistance off of here, but if it blows right through it, then I'm looking for this here. And then the market structure shift occurs above this big block here. See how the bull trap held? We run through it. Now look for this little fella down here. This is the last one. You see if you get a bounce off of that. And then a run higher. So for me now, I have to see this break that high because this has been broken to the downside now. So now this becomes inversion or reclaim fair value gap. It's now back into a fair value gap. This was inversion. Now all of a sudden you trade through back the other side and you treat it like a fair value gap now. So I've got to bust through that high. And now we have a new swing point. And we have no SIBI in here, so you still have to rely on this one. So now it's not continuation yet. Now it's continuation if we break through this last little guy down here. You can't just look at the obvious ones. Sometimes you got to stretch everything way out here and look for these little imbalances. They are important. They are the hidden SIBIs or BISIs that we're looking for price to potentially come back to. And the untrained eye will look for this only. Right, and you'll ignore these little guys down here and say, oh, it traded through it. Now we're going to go for a continuation model, right? Wait for the lowest one to get taken out. Then it becomes that little tip and then shoot down. Then your continuation model goes through. So you can see how we traded above this one and then below it, but you're still inside this range and you still haven't hit the lowest one yet. So this is still got to be validated. This one was, that one's not. We're close, but we didn't get it. Now you're waiting for a body to close above here. See how this is all chopped now? Not what you want to participate in. So wait for clean evidence to say I'm changing direction. So I want to see first a big break above here. Like this one here, we don't want to get suckered into that trap. Where was that trap one? Oh yeah, right here. See all the wicks going just above it, tempting you to go higher? We're not going to get suckered in again. So we don't want to see this just wicks going up in here and then it rolls over and goes lower again. That's our first bull trap, not that one way up there. Does that make sense? So you see how we keep chopping around inside this whole high, low, and we're chopping around inside that fair value gap. This one we ignored, that one we ignored until we finally stretched everything out and went, oh yeah, okay, it's sitting right there. There's a little guy there and a little guy there. See that little tiny one there as well? And there's another tiny one down here on the busy side. So wait for it to clean up. And 10 o'clock, that's our typical 10:30 Tibbs run. 10:32, then it's 10:30 right there, right on the money. You'll typically see what we call a Crazy Ivan. We affectionately call Crazy Ivan. Crazy Ivan is bottom of the hour. It's our Hunt for Red October reference. The melody, if you've never heard it before, the Hunt for Red October, the movie, at the bottom of the hour when the sub guys are chasing that Russian sub, and at the bottom of the hour he does a Crazy Ivan. This is the bottom of the hour, so I affectionately call it the Crazy Ivan. For the first 8 minutes after this turn, Crazy Ivan does a look back to see if anybody's here, and if he sees you, he's coming for you. If he doesn't, he rolls over and it continues back on his course. That's from the movie. Melody's like, ah, men and their crazy movie references. But that's the Crazy Ivan. There's the 38 time. Now Crazy Ivan didn't see you. He wants to continue coming lower. That's the first 8 minutes after. And if he comes back and sees you, just he'll book right through and chase after you. So we got our reverse going on. So wait for your crazy Ivan to occur and see how we've got like evidence that says, I think he sees you. He's close to seeing you. Bull trap, you're hiding behind that rock, hoping he doesn't see you. He senses something's wrong here. I'm trying to use a movie reference, trying to give a little drama to the candles. He sees something sticking out behind that rock. Is he going to come for you? Not quite sure. He's coming for a setup, and then he's charging in to take you out. It's very dramatic. The candles are the movie's playing out right in front of us right now. The sub is back and forth, honing in, using sonar. Does he find you or not? Now we're looking for 40, 42. So here's 40, 42. Does he come for you at 42? If not 42, 45. Do we see a reversal at 45? 50, 52. Nowhere else on the internet do you get a movie reference whilst the candles are forming. The drama of the candles. Only here, folks. You see the drama playing out in the candles. Some people see back and forth. I see submarines. I see the American sub sitting here and the Russian sub back and forth, zooming in using sonar, trying to find them. You gotta love the ADHD brain, hey? It's a gift, I tell you. People think that we've got our ability to hyper-focus and our ability to not focus on anything because we're all over the place is a problem. It's a deficit. Hell no, man. Embrace your neurodivergence. Embrace it, my friends. Because it could be a power. It could be a secret weapon. It can be a wonderful thing. Don't ever think you've got disabilities. They're just gifts that other people haven't figured out yet or haven't been blessed with. See how we're coming back and forth? It's searching. It's searching. Inside this consolidation, we're back and forth now. So now you sit and wait. Don't make any entries. Don't make any trades. You just kind of wait. Retail looks at this as a bear flag, right? It's a bear flag forming. We know a little different. We're looking for, yes, that could be a bear flag for continuation, but I know where my continuation data points are. See how he's slowly zooming in? He's going to find the little American sub right over here. Where's our carrot? It's the American carrot sitting right up here. He's looking for the carrot. I'd like to see that freeze right on there. It's not. Keep coming. Keep coming. We want to take out that little sub. He's zeroing in on him. He sees you. He's moving back and forth, finding you. You're sitting right behind here. Missiles away. You are done and dusted. Yeah. So now we're looking for here. So now we're just waiting to see if this closes above here now. Crazy Ivan, he saw you. zeroed in on you and took you out. See, isn't it so much more fun when you use a movie reference? He's using sonar, zooming in. He sees you, comes for you, takes you out. Now we're looking for, this has now been validated, and I want to see if this bull trap here now gets closed above. So you got 19 seconds. Now this and this whole area right here from there all the way down to there becomes my continuation. And we're targeting this no-go zone up here, right? So I'm looking right here next. Right there. See how we closed above it right there? Now we're good for a reversal. Change in direction right here. See how it right here would have been nice for an entry long. And then for me, that would have thrown me off there, except for the fact that we've got these down here. So those are all valid entries for a long. Now you're waiting for it to get its ass out of here and take this candle out on the upside. It does right there. Now it comes back in. We're validating it. Now you want to see this candle hold price. If it loses its mean threshold, then stay out of it. Stay out of it. There's the retest all the way back down. I like it. We're above this high here as well. Look for the mean threshold right there. Come on, send it up. Change in direction right here. Keep your eye on that. See how we've come back and hit it already? You want to see it pop through it now. So now you've got diverging directions. You've got one that wants to send this lower, and you've got this one that wants to hold it and send it higher. So if you're watching this from a drama perspective, it bounced off the diving board, and you want to see it launch straight up through this level, find support at it, and start pushing through to our carrot on the next level. So watch right here. See, we're above it. Good. Now you want to see it keep going higher. So far, works. Now you've got your continuation model melody. This is the reversal model, internal range liquidity hunt model now. So you'd use your fib tool, pull your fib tool from the high to the low. We got in below 50%. You see that right there? You hit 50. You might want to say, well, I'm going to wait till it breaks that high. As soon as it breaks that high, now move to 50%, pay yourself at 62. And now you're looking for 70. Internal range liquidity hunt. This is the model we're using. So we got a reversal, 50, pay yourself. If you manage to buy in here, all in this area we talked about, and you held through all this chop, you pay yourself at 50, move to break even, take half your trade off, 10% off here. Now you're looking for 70. So let's say our stop loss. Our stop loss is sitting right here, right now at 50%. So we've paid ourselves at 62. And we're waiting to see if we get taken out here at 50. So watch right there. So this mean threshold, you want to see hold price. You don't want to see it close all the way through it. So right there, hold off there and go back higher. It was validated right there. Ideally, I'd like to see a body get above there, not just wicks, but that's a valid candle for support to go higher. And we're just below 50% of that wick. Keep going. Get up there. Yeah, now get on top of that. That's a valid candle now. Now I want to see this act as support. Get up there. As soon as it hits 70%, optimum trade into reversal, pay yourself again. And then you're going to move your stop loss from here up to here. This is internal range liquidity. You think about how many setups I've given you guys this morning. And again, I'm not looking to, you're almost tagged right there. Look at that. Not what you want to see, right? So this is not acting the way you want it to act. So you're out of the trade now. So you milked up to 62% of that internal range liquidity, and all this chop, move to the sidelines now and wait. Even when you're on the wrong side or it's acting inappropriately or not acting the way you want it to act, you can still munch a couple of little coffee breaks out of that. Swiss dollars, as it were. You guys don't call them dollars. What do you call them over there? Swiss francs. Is it the franc? No, I can't remember. So market structure shift. Body breaks below it. Comes back into it. Small little shift here. Internal range. Small little shift. Come back into it. Start to run lower now. Now we're back inside this go, no go zone. I want to see that get broken. And then this little fella way down here at 25,320 for continuation. That's all you got from that little internal range run right there. See how it saves your ass? If you thought this was the big reversal and we're heading all the way back up again to those all-time highs, you're crazy. Do it internal range and make sure it's supported. If it's not, get the hell out of it. And you can see if you stay on the horse long enough, you start to see where it turns. And you say, I'm on the wrong side of it now. You're either willing to give up all your profits, or you pay yourself on these quick little sniper internal range liquidity hunts. That's why the reversal internal range liquidity model works with Take Profit Model 1. Works amazing. Take Profit Model 1 is really a great way to protect your money really quickly. If you're one of those people that hate to put your money at risk, it's the best model I can come up with for protecting your money as quickly as you can. See, support, driving down now. I want to see this mean threshold give way, and then another little shift through here. This becomes important level, so you're marking this out. So we're just trying to stay on the horse right now, Melody. We're not trying to slay any dragons. We're just trying to stay on the horse right now. Because as we know, we still have some more downside objectives to reach for. So now that we're through this level, I'm looking for right here. Now you have to ask yourself, if we've taken this low out, what level should you be marking out in your chart right now, Melody? Right there. There and there. That's the two levels. You want to see it break to the upside, come back, find support. And where are we inside this range? We're way into the premium. So do you want to pay for that, or do you want to wait for confirmation that the breaker here that took out its own low is the support to go higher, targeting our next bull flag or our next bull trap? See how that literally broke through this one and ran up and tagged this one? And that one said, hell no, we're not giving you anything. Full on take you out. So it just came back. The Russian sub took out our little American sub here, and then we kept coming back. So damage is done. Now he can continue on his way. Sorry, Americans, you lost that one. Watch right there. Done and dusted. Now we want to see, we're going to start targeting this down here now. I want to see a retest of this. This is our no-go zone, right? So now we can't find support and go higher. We didn't find support off of this. Remember, its mean threshold gets traded through. You trade back up into it, and we're going lower. This one's broken on the downside now. So we've got structure, 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 and then we're looking for the big structure here to continue. So we're targeting for this low right here now. You got to appreciate a nice little 62% retracement optimum trade entry reversal, hey? Excellent. Now let's see a retest of that low. This is our, remember that last little guy we saw right there? Run back through, retest it. Now let's go lower. Let's see a nice little range extension now. You don't even have to come back up inside there. You can, but I guess we're going to. Retest here. Mean threshold lines up with here. So give me an institutional order flow entry drill. Just come back up and tap that low there. So you see how we talked about this melody? We talked about it has to break that one for us to have our continuation. And now we've broken it right there. Now I want to see this come into our little carrot right here. Keeping in mind, if we're into this consolidation, messy crap going on here now, it's getting choppy. We want to see this close above that level for another run back into here, into that internal range liquidity. So it has to break above here, come back, find some support in the discount, and run to the premium. And unfortunately, this no-go zone extends all the way up to here, which is in the premium portion of this whole range here. There's the second one. Institutional order flow entry drill. Let's go lower now. This is the next range low right there. Always consider that if there's a swing, take out the low that's the most recent low. Then look for that next low right here. Done. Right there. Boom. Delish. See that? That was our range continuation model. And or sorry, range extension. And now we're smashing through our next levels. Where are we heading to next? Holy, did you catch that? Did anyone get on that one? I gave you that one nicely there. Look at that, beautiful run. You're in that, Melody? Good for you. Rez, nice, buddy. You're all sitting there all quiet in the background, didn't it? You haven't said anything all day. Good for you, buddy. Rez, we need to program this into an AI. I'm so frustrated. I'm working with 4 different AIs right now, and neither one of them are, they're all making the same damn mistakes, which means it's probably input error on my part. But yeah. That went straight into a full-on range continuation model, hey? Wow. Didn't even get a range continuation. It just went straight into extension and just extend like crazy. I like the way they stayed below our level. Nice. Wicks did some damage, but came back into a level. We wanted to see it tap it. Look how close we were to tapping it. It was like 1/2 of a handle. half of a handle to come back there. All right. So where's our next downside objective? All right here. 179. Looking for the torpedo to take us down to 179. Our depth is now set for 179 meters, 180 meters. There's the retest. Now come lower. This is the new no-go zone from way back over there. Give me your description, or we can have a session together and see to it. All right. Well, I think if you haven't heard my description all day long, I've been giving you my description all day long of the go, no-go zones, the fair value gaps that when they turn into inversions. If you just had something that would create, just look for fair value gaps and validating when they're validated and when they're not. When they become inversions, then just that bot alone can be some sweet stuff. The tricky part is when I talk to the algorithm, it says, yeah, it traded below it. Like you said, that validated it, right? Then all of a sudden it went back through it. So you got to tell, if it trades back through it, it's wrong. So then it trades back through it and goes, okay, it's wrong. Now you got to try and say, well, if it trades back through it again, does it actually find support? We make so many assumptions as humans when we look at charts, so many assumptions that we think, oh, okay, my brain goes quickly scans through that and looks for patterns. But when you're programming that, a computer, it just gives you the absolute definition. You said, if it trades through that fair value gap, it's valid now. So it would tell you to take that short, and then all of a sudden it comes back against you. Well, that short is taken off the moment you break through the upside. If it comes back, retests it, we're looking for a long, and then you have to have the ability to look back inside the range and say, where's my BISI inside that range? Not just this, because if I tried to do the algo or the AI to just look for the nearest high, because that would be a swing high, swing low. That would be my small range I'd be trading in, and it would start to do that. And then I go, no, I don't want that. I want, where's my next BISI? So I tried to set the BISI as the range. You see how then it started to eliminate all this stuff and said, okay, I'm looking for the previous BISI. Then it went completely sideways. It just, if we're looking for the range res, what I'm looking for is the range that has the BISI and the SIBI in it. So here's the SIBI. There's the BISI range. So if I pull my fib tool from high to low, there to, and it would scan back, it would say that's a swing point, but it's not, doesn't hold a BISI in it. That's another swing point right there, doesn't hold a BISI in it. Another swing point doesn't hold a BISI. Ah, this one holds a BISI. So keep skipping all these little turn points, or what we consider swing points, and says, there's a swing point right there. That's the one I'm going to pull it off of, right there, because that one contains the BISI. So then you say, look at that. That's the one we pull from. Look at the 62% in terms of it. So if we break above here, and my rule is if I break above that, then I want to hunt for 50, 62%, right? So if I break above it and then you break below it, it's invalid. My rule is I break that, I'm done. I wait for a market structure shift because it broke it once, broke it twice, I'm done. Then it breaks it a third time, comes back, then hits the 50, 62%, right? So then you just wait for a different setup. So it's got to go back in time and find that BISI and skipping all this stuff. And then it's got to hold those two in its memory until one of them is broken to the downside. And if it is, then it becomes the new no-go zone. Retest it. Now I'm looking for a run lower. That's it. That's as simple as I can make it. Because I said it was, I originally ran into like almost 2-3 days worth of nightmare as AI keeps looking for this and not that and holding that in its memory. So all you're saying really is you're holding those two in memory until one is broken to the upside or one is broken to the downside. So it gets its downside broken and retested. Now it's a short. If it gets its upside broken, it's a long. Inside the range, pull your fib. Then you got to get it to pull a fib tool. I haven't even got to that point yet where it's pulling a fib tool. It can't even give me these damn sibby bissies because I'm not describing it properly. Anyway, if that makes any sense, Rez, there's something to work with. Here's a guy that builds there's our target. Smash 180. Look at that. Whilst I was blathering away, our target's hit. There's our reversal model, our continuation model. Oh, there's our go, no go zone. Look at that. Ah, done and dusted. Where are we looking for entry? There's Vitali. He's just one of those guys staring at the silver going, give me more silver. Give me my silver entry. There's the 180. So what I want to see is, do we have that as our final downside objective in our weekly? Has it been hit? Now do we have a reversal? So again, you're starting to do, so now what I'm looking for is that up there. Where's our bull trap melody? Yeah, it's right there. See how that's above 50% of the range? So you really have to pick it up down here and stretch it out. Is there something in there? There is, so you have to include it. So we want to see this now. It's 11 o'clock. Ooh, what do we say about 11 o'clock? 11 o'clock likes to make a run on the previous significant high or low that's occurred at 10 o'clock, 10:30-ish. So I want to see this get broken to the upside. And we'll go on a little buying spree. Let's take the reversal. I'm not saying let's as in everybody. This is just me and my multiple personalities. We want to take this inside here, a close. So if you're thinking this is the low of the week or the low of the day, then you want to see a market structure shift here. Not just an internal range liquidity hunt. You want to see a market structure shift here. But I'm going to trade right here. I'm going to try and take 50% of this. Because if our fib tool is from here to here. And this doesn't mean you guys take this trade. I'm just looking. It's got to get above here though. And it's not. It's just wicking. It's Wiccan doing some witchery here. Your silver. Let me give you a silver entry here. Silver idea here. Vitali. Ooh, Vitali. Look at this. Look at this, my friend. Look at that right there. Trades all the way through it. Comes all the way back to it right there. Changing direction. You don't get that one. It ran all the way through. Nothing here. 50%. Wait for a market structure shift. Here's a market structure shift. We take a little high out here. Change in direction. Trade through it. You don't get a chance to get back into it here. So you wait for this low to get taken. It does here. You trade back into it. Right there's your short. Targeting this low here. It runs all the way through it. You go, sweet. Now, if you can get if you took it all off there, then you don't get any more. There's nothing in here. It just kept running on you. You'd have to look for a 15-second chart to see if you can come back into that level. And it just left on you. That's all. Oh, Vitali. It looks like you're going to get yourself some delicious new run. That's a 1 minute. Where's a 5 minute? Here's your next price leg as a downside objective. 61.25. So look for here and wait for a reversal. And if it doesn't happen, we're going to go for higher time frame objectives to reach for. So look for your 15-minute, which is right here. It's coming into it right now. Let's just hit it right there. See that one right there? Let's hit it. Now you want to see it pop through that. Take this low, and then I'm aiming for of that next price leg. Look where it lines up with. Draw it all the way across. Right to that high. Right on the beezer. Look at that. And it's right here on top of another Sibby. Oh, delish. Now you want to see this breaker give way. So it's all, there's confluences down there that tell me I'd like to see it hit here. And then you start hunting for, if this is a sell model, looking for original consolidation that started this whole run higher, to see if that original consolidation gets taken and this liquidity below the market, then you're going to start hunting. This is beautiful. You want to see this because there's a big open pockets that you want to aim for on the upside. So wait for your opportunity down here, Vitali, for your silver entry. See how we did not get back above that level? Forget my carrot. We're going lower. See how we traded back through it right here? That tells me I'm on the wrong side of it. We'll come back in, get back in sync with it, run for extension, because this is the extension model, right? We try to get up there, it doesn't work. So all we need to do is see it, validate it below, come back into it, and then we get range extension. So if we pop back through there again, we've already got our extension model. We don't get a continuation. So for me, you'd have to break above here, not just this, because breaking above this level as a swing puts you right in the bull trap again. So wait for the bull trap to get taken. I'm looking for 62.03 for possible levels of turn. Sorry, where was that? 62. Did you say 62.03? Oh yeah, you're way through there, buddy. You're looking for down here now. Looking for these lows to get taken. And that level, that's the next level we're hitting, but it's got to break through that. If we've ran all the way down to here, this 61.68, which is hit it right on the money. Now wait and look for a change in direction there. But remember, all we could be doing is trading back into the go no go zone. Here's your go no go zone for your silver. See that? Right into it. Nailed it perfectly, and we kept going lower. As soon as you break through the go no go zone, you come back, use it as support to continue pushing lower, and you aim for your next objective, and it hit it right here. And you think, some people might be thinking I'm form fitting that, but I've talked about this all day long. So if you're new and you just popped in, you just think that's a form fit, it's not. I've been showing you that live all day today. All morning, not all day. Rez, correct. It's quite a craft. What you do just to move between time intervals and the contrasting results. I need clear description, machine understanding. That's your job, Rez. You're the clear understanding. When you got to get inside my head and understand the mess. Do you remember what it was like when you're sitting there and I was rifling off tons of information and you're going, okay, just slow down for a second, just stop. Let me just ask a question. Okay, that's good, but let me just ask a question. That's that machine learning in your brain, trying to get into this head. Man, it's like getting into Hannibal Lecter's head. You're like, what is going on in here? Oh, that's hilarious, Rez. So I'm sorry, man, I can't give you machine understanding. You get the electricity, you get the neurons firing. You gotta make sense of it, man. Oh, that's hilarious. What's that? I haven't blurred the background. Poor Rez. He's like, I can't work with a guy like that. He's insane. Everyone just hit buy. Close your eyes and hit buy. Exactly, Ollie. Looking for 1 hour and 4 hour. Been quiet a while since we had such a large gap down. Great. Long is coming. Bus is coming, says a D. Needs the market structure shift. Ah, that's funny. I just got a mental picture. I play these little movies in my head, and I got a mental picture of Rez just sitting there with his eyes going to tilt. It's like, no, I can't work with this guy. I can imagine him at the corporate meeting. It's like, okay, Hadi or Rez, we got Reza, we got this guy that he's got some ideas, and we need you to put it in machine language. And him coming back after the meeting, just shaking his head back and forth. Just say, it's not going to work, boss. Not going to work. You can't do it. You can't work in that guy's head. He's all over the place. Ah, that's funny. It appeals to that tickled my funny bone. So see how we're chopping around in here now? Typically, you want to see 11 o'clock. Take a run on the most recent significant 10:30 run. It's not really doing it though. It's staying heavy here. Well, we got up to 26 people today, I think. Word's getting out, man. Tell your friends. Let's help each other out. Let's help some people out here. Let's help their understanding of the markets. We've been giving you like laser crazy accuracy today. Like bomber accuracy. Like you got to love this kind of stuff, man. When the market's, like I told you before, when the market's acting the way you want it to act, holy smokes. That's what you're looking for. That's the clean price action we're looking for. Then it starts to go all choppy. Just move to the sidelines and wait for something to clean up again. It really is that kind of discipline. That's all it is getting that kind of discipline and sticking with it and not letting the greed kick in. Just keep sticking to machine, acting like a machine. As my friend Reza would say, you got to stay with machine type behavior. Machine type behavior. Follow the rules. The penguin says, follow the rules. It's almost coming to the end for me, my friends. The show is winding down for me. I know it's only 20 after 9 my time, but you see how we're still using that zone there to continue pushing. We're attempting to get up in here, and we just can't get up past this level. This bull trap holds price right in here, just smack, holds. It's just saying, no way am I even going to give you an indication that you're going to go higher. I'm holding you down here. We break through, and now we're just popping into this zone. We've drilled holes in it like crazy. So when we finally bust through this, you're going to see a rapid run through there because we've been drilling holes in this. We're going to come back and then make a charge on it, bust through this ice block here, come back down, and then get some support on top of this wall, this ledge, and then start hunting for this ledge, the next one. So you're going to see some really quick. If this continues to drop down, when this comes back, it's going to blow right through this stuff. We want to see some real, when you hear Michael talk about, I really want to see it explode now. I really want to see some energy explosion. That's what we're going to expect to see after this. So you're kind of anticipating what you're going to see in the future, right? This consolidation, I want to see it bust through, give me a cam model 1 and just drive this baby higher. Today was a very good day. You're done for the day. Have a great day all. See you all next week. Have a great weekend. See you later, Hadi. Say hi to the family. Give everybody a hug for me. I hope everybody does well. I hope you have a great weekend. Have a great time, man. See you later. Next week it is. Yeah, if you want to work on something like that, Reza, I would love to have a chat, especially with a guy who builds AI. I literally playing with four. I'm playing with DeepSeek, with Claude or Claude, whatever it's called, Grok, which is absolutely useless at coding. It is useless. It's got like 100% failure, and occasionally it will give you one that you go, wow, you actually got a working model, albeit completely wrong. You do have a working model. It's terrible at coding. Grok sucks at coding. I'll give you a 0 out of 10, Grok. Chat GPT will give you something. I will probably give it a 4 out of 10. Frustrates the hell out of you, but it will occasionally give you code that actually works. And DeepSeek, I'll probably give that a 4 or 5 out of 10. And then the Claude, nothing. So far, I'm just starting with that one. See how that's held? It ain't busted through it, so we're still short. Drove all the way back up in it, find support, reversal model or extension model right there. There's your extension. Albeit choppy, it still gave you your extension. Notice how we did not climb above it. We stayed into it. So that's our continuation on the downside. And that's what you just got there. So now we start looking again for the change in direction. And where's our bull trap now? Do we look at these little fellas? Do we look at these as bull traps? They're hidden inside this right here. So you have to treat this whole area like a bull trap. You might as well just wait for it to get above here. You might see it come up, tap this, roll over and go lower. Eat into here, go lower until it breaks through that. But then you've got the big bull trap you're sitting inside. So see how they kind of encompassed inside that one guy? So I would take that, not worry about those two. Take that one. Look at the chart. No market structure shift. No long. Absolutely agree, Hadi. We did not break anything here, and we have not broken. Decent market structure would be up here. Okay. This is small internal range liquidity. I'd be hunting just for internal range liquidity. Market structure shift would be much more significant up around the 400 zone. And that's like 300 handles away. Jesus. So think about this morning. Like, holy crap. From 600, this reversal right there, that precise point we looked at this morning at 620. Look where we are right now. We're down to almost 120. That's 500 handles in a day. And we've been calling it down, down, down. At one point, we wanted it to go higher. As soon as it changed over, market structure shift and gave us our short, we're on with Kevin. And from here on out, we got 500 handles run. And we caught that. But see how you find, it's no offense to Kevin because he's got a method that works really well for him. I need to see the structure. I need to stay on the horse and see the structure continue to unfold in the direction that he's got a gift of figuring that out, man. He really does. And knowing that's where my target is. If I got a lower time frame target, how you can keep staying on the horse. That's all we're doing here, staying on the horse to get her to our objective. $25,070 is the daily volume imbalance. It is, but it's not the SIBI side. It's the BISI. Our weekly fair value gap down there again. A new week opening gap. You just hit that. You're always looking for a reversal. Every time you hit these higher time frame objectives, looking for a new reversal. $24,889. would be 24,889 right there. If we get another dive down after lunch, look for here. 1, 2, 3, 4, 5. Oh, see how we've done this big dive down today and set the low of the week? If we retrace back after lunch, get a market structure shift right here, and we get a run back up into 20%. So we're at TGIF Friday. Think about that. TGIF Friday would put you right, if this was the low, which I don't think it is, but if this was the low, all the way back to 361 to 288. So 288 up here to 361 up in here. So you're back inside this big range again as a TGIF. That's if this was our low for the week. All in 2 candles. I'm going to leave that there just because that might be a... We've run out that low on December 1st. And we've come all the way back in and filled that 125, 139. That BISI is now done. So I would expect to see a reversal here. If it's just coming into that BISI, ideally I'd want to see that hold price right there and start going higher. So let's start scouting out a run here. Let's start scouting out a run. A change in direction. That is right there, is right on the Beezer. So now I'm neutral right now, looking to go. I'm tilting more towards the old going north idea, right off that level. That's perfect. Now I want to see us take this out and see a market structure shift. Then I'll get in on this for a long. Right there is your first entry. Not that you want to take that because this is consolidation. Wait for a market structure shift. Wait for something clean. But that's the first indication that we could be turning right at a key level on the daily. $606 is my first short. 606. 25057 is your daily volume imbalance. I don't see a daily volume imbalance down there, Hadi. I don't see that. I just see another. I see a 25065 to 25 big figure below us as the next BISI. But right now, this one here, I want to see a hold. That's what I want to see right here. This is good. Entry. Now I want to see that close above here. Now, if you did get in there, you pay yourself there, break even, zero stress trade. Within 2 minutes, you're in a zero stress trade and you've paid yourself. The bull trap, paid yourself inside the bull trap. If it comes back through you and takes you out, look at this retest, this little bull trap right here, this little guy. See how we run through it? You come back to it. Even though it's inside this guy, that guy's my important one right now. I want to see it get broken on the upside. Oh, it might have actually closed above there too. Yeah. This could be just rocket out of here now. Because if you look at the high on that candle, it's 22375. The close is 22425. So it's half a handle above that, a close. That's a close above. Not, but you want to see a market structure shift. Let's get a body above here and see if we can't get some support. Let's be really conservative and say I want to see a high get taken with a body and give me a nice continuation model. Hadi, you're still here. thought you were supposed to be leaving. Yeah, you're like me, man. You want to hang in there. Oh, look, there's a lot of lag going on in there. See, I haven't broken above that high yet. Come back and retest it. See that consolidation? Don't get beat up in that. Just wait for something to break out of there. We're down to 16 weary traders. Remember, we do not have a reversal just yet. We have a change in direction right here, and that's been milked. We got a change in direction. You milk it out of there, pay yourself at rejection block. You didn't get the high, pay yourself at rejection block. Quickly comes back and closes out your trade. So now you want to see if it closes back below here. If we get through here, then that becomes the new go, no go zone. So that was our run higher. Now we're looking for a I'm neutral right now with the carrot. It's still supporting a going higher. That no-go zone is holding. So it's still go for a long. You have equal highs above you. And that whole consolidation's been worked quite a lot. So this has to hold now. Need to hold it a little longer. Sunday. Yeah, see how it's failing now? It's below it. Come back, tap it. Now let's go lower. Let's see if this takes it down now. We ain't done down yet. This way. Yeah, we traded back above it again. That's when you get messed up and chopped. That's why you wait for market structure shift now. Otherwise, see all this back and forth stuff. Rules been violated. Wait. It does it once, does it twice. Now wait for market structure shift. Don't chase this. He's taking a couple of little hits there because you keep wanting to jump in on that when it changes, goes through that inversion point. Don't keep doing it because it'll bounce around and take you out. It'll keep eating away at some profits that you made today. And let's face it, you've had some great entries. Don't start giving it back now, especially as we get the end of Friday. You don't want to make these major hauls out of here that we've made today and then turn around and give them all back at the last hour or 2 hours of the day. You don't want to do that. That's devastating to go into a weekend with that kind of feeling because you got too greedy and you gambled too much. You wanted more instead of going, look, man, I've feasted today. Let the rest of the people feed. This was Piranha Feeding Festival here today. Lion's share. You were munching. You had some good trades today. Now we're back through it again. If you look at another on these lower time frame, the next higher time frame above you, have you got anything that indicates that you want to start going higher? Nothing. There's zero in here. We got a nice little bear flag going on here. The 15-minute, you've got one little one right here. So I want to see that break here and take market structure to the upside to go higher. Otherwise, there's nothing. Lower time frames macking around here inside that thing, and we've got nothing here and nothing here. So don't touch it. I think that's going to be it for me, you guys. I'm out of here now, so I will see you guys on Monday. Hopefully you've appreciated our little session today. It was been a lot of fun. It's been a great session. There's lots of videos this week. You guys, if you're new to our channel, go back over and watch them. There's some real awesome advice and tune or setups and stuff in there that you'll see us just repeat every single day. It's the same thing. Look at that. See how you broke below it, then above it, below it, retest it. Now you got the range extension. See how it can muck you around a bit. So now we're looking for that next downside objective, which was, what do we say that was? 059 to 998. 059 05 I want to look for it here. That's my next target. To this is the next daily target right inside here. There's the retest range continuation model. Look for a run into here. Small little imbalance right there. I'll have one more quick look at your silver there, Vitaly. There's the downside objective we were looking for. It's hit it nicely. Pull this guy out of here. Nice. There's the breaker right there. Hit our downside. This is beautiful, Vitaly. You just keep enjoying these big blocks coming down, because that just says, ooh, baby, let me come back and get some of that. Look for these equal lows down here now. I got one more level right there first. See if we tag that level right there. So pull this one here, right out. Pull this one right out. And then the very bottom one that I see is right here. Just inside that area there. And then we're looking for the lows. Rejection block, lows. So next week, Vitaly, we could get yourself a nice little dandy run. That's another $4. That's 20%. Or not 20%. It's 2% of that account. If we can get back down here at $60, you can almost get another 10% out of that. If we can run back up to 65 next week, 10%. Nice. Nice. My word. Mr. Jones. Mr. Jones, what have you been up to? Mr. Jones. Go, no go zone. Bam. Every day and every way, it just keeps rocking it, man. Just keeps rocking it. Wait for structure break. And accelerate, like with intention of saying, now I'm done down here. I want to get out of here. So anyway, that's my rant for the day. Like, subscribe, notify, let your friends know, spread the word. Let's see if we can help some people out along the way. And remember, we're not selling anything. And please don't sell whatever you've learned here. Just give it away. There's no reason why you should be preying on other people. Let's just help these people get ahead in life. Be kind to each other out there. It's the weekend. Make a conscious effort to be kind to somebody this weekend. Find some love and peace and joy in the world and enjoy it. So I will, until Monday, I see you guys. Love and peace. Take care. Thank you again for your time. I really appreciate every single one of you who turn up today. Thumbs up, subscribe. I'll see you guys on Monday. What you gonna do? Okay, I'm done now.